Hey everybody, this is RC Peck, and this is Fearless Wealth, and I'm here to talk to my money badgers. And here's the thing about money badgers, they don't care necessarily why, they just care what's happening, right? A money badger is someone who understands the difference between getting taught and getting trained. So I don't personally care the reason why something's going up. Oh, buybacks. Okay, well, so there's, buybacks, stock buybacks, but the market's going higher. Shouldn't we care more about the direction than the reason? Now, if the reason is maybe temporarily, that's different, but buybacks have been going on a decade. Yields have been dropping for 37 years. So yields are probably going to continue dropping. So I want to talk to you about what I think does matter. Now, the thing is, a honey badger is unattached to what he or she thinks matters. But I want to show you three price charts. And on the top of the screen, let me just get most of the screen to the image. So on the top of the screen is the yield from the German 10-year Treasury. Okay, so today is Thursday. You guys will get this sometime after this. But today, if you buy a 10-year German bond, they're going to give you negative 0.6% a year. They're going to keep a little bit of your money each year. And that's the top chart. Now, that black horizontal line is the zero line. So you can see here that the German, let me get my little cursor going here, that the German 10 yield has been negative during this whole time period. Okay, now to me, here's what's interesting. It wasn't really until right here between the two blue horizontal lines that the yield broke down to new lifetime lows. Now, what I think your brain also sees is as the yield on the 10-year falls, the S&P goes higher. Now, I just happen to be looking at a little over 10 years of data, but man, if that doesn't look very, very correlated. As one falls, the other goes up. And it seems that the direction of the German 10-year yield is pretty much stuck going lower. Now, does that mean it's not going to come back up here and correct? Maybe it'll come back up to the zero line. I don't know if it will go to the zero line. Maybe it'll correct up to maybe just negative 20 basis points. But I want you to see this because it's my belief. And actually, let me get rid of these thumbnails because I want you to have as much view of the chart without any noise as possible. It's my belief that the yield on the German mark, that's funny, I still say that sometimes, German mark, the yield on the German Bund is going to continue to go lower over time. And as long as that continues to go lower, now guys, I don't know how low it's going to go, but I predict and believe it will not stop at the negative 60 basis points or the negative 71 basis points it was at 2 days ago. But it has fallen quite some, and so it will probably move back up and correct a little bit. But I believe as long as the yield on the German bunds keep falling, the US stock market will continue going up. And this is pretty powerful because we want to be unattached to why something is happening, but we want to be attached to the direction it's moving. Now, you can nod along with that, and a lot of people who, maybe are taught or looking for new information will get it, but if your money isn't growing, that means what's missing is getting trained, literally training your brain, training your money to follow the price, not follow the year you were born and not follow how you answered those 12 questions at Raymond James, but actually follow the price. So the second price chart I want to show you on the top is still the yield, the 10-year German Treasury yield. That's still the same one on top. But on the bottom is gold. Now, in this case, the gold on the bottom is priced in dollars. And I mentioned for a while that once gold breaks about 1385-ish, that's going to be a major breaking point. That's kind of be the beginning of the beginning. And so what's interesting to me is if we go up here to the German 10-year yield, it was right about here between these two blue lines that gold took off, like really took off, went from about $1,300 to $1,550. But look at right here what's going on. This is where the yield on the German 10-year broke to new lifetime lows. So what's interesting about this is the US stock market is paying attention to the German bond yield. Okay. Gold is paying attention to the yields in Germany. This is important because these are world assets, right? The S&P 500 is the most followed stock index on the planet. Gold is the longest traded asset on the planet, right? It's the original currency. We humans have been trading gold for 5,000 years. Gold's paying attention to the German 10-year treasury yield. So if you're worried about gold, or if you're like, is there still more room for gold to move higher? My answer is, as long as that German 10-year yield stays negative and continues to weaken, which I believe it will continue to weaken, not in a straight line, gold has a lot of wind behind it. Because when gold goes up, that's saying people's concern about the future is increasing. But here's the thing about the world we live in right now. There's going to be a lot of volatility. There's going to be a lot of scariness. And so just as gold moves from 1,300 to 1,550, no one thinks of that as volatility, but it is. Gold can go from 1,550 down to 1,500, right? You're going to want to train your brain and train your money to stay on the line as long as it can. And that's not going to happen through knowledge and teaching. It can only happen by training your brain and training your money. And so I got one more price chart for you. And this again has the German 10-year treasury yield on the top. Now, again, here's what's great about this. We can be unattached. You can train your brain to be unattached even if you own what's going up. You can train your brain to know when something moves against you. It's not going to happen through teaching. It's not going to happen through knowledge. What am I trying to say? It's not going to happen through knowledge collection. Okay, it happens through training. Now, here's the last chart I want to show you, or maybe it's the last chart comparison I want to show you. On the top is the 10-year German treasury yield. And again, between those two blue horizontal lines, you can see right about here, the German treasury yield breaks down to new lifetime lows. Now, look down to the lower price chart. That's the yield of the 30-year US Treasury bond. Notice how that almost kind of collapses. Like it almost kind of collapses. I mean, that drop down, that is an impressive drop. And when did it happen? Let me go back to where the German broke to new lifetime lows. It happened when the German 10-year treasury yield dropped to new lifetime lows. What we have here is the world is watching Germany. Why Germany? Germany is the engine of Europe. Why Europe? Europe is the largest economic bloc on the planet. So I believe those collective 400 to 500 million people trading in the stock markets and the bond markets and the gold markets and all those different type of investment markets, they're really paying attention to Europe. Specifically, they're really paying attention to Germany. Now, this is really interesting, but interesting doesn't matter unless you can actually put it to work for you. And so I simply want to point out that when you keep your mind open and you train your brain to be open, you can be more attached to what works, right? And what works is following the price, not following the year you were born or following how you answered those 12 questions at Edward Jones. And so when I sit down and I think, okay, what do I want to talk to my honey badgers about? I think, okay, what's going on that no one's talking about? Or what's going on that no one's talking about in a way that can bring a level of clarity? And the reason I wanted to bring this up to you this week is A, no one is talking about this on the planet, meaning these three correlations to the German 10-year treasury yield, right? The US stock market, the US bond market, and gold. All three are paying attention to Germany. And the reason I bring it up is because if there is a causation, which I believe there is, then the question is, okay, which direction are German yields going? And the answer is they're going down and to the right. And as long as that continues and stays in that trend, we have a stock market that wants to go higher. We now have a gold market that wants to go higher and will probably go higher with a lot of price volatility. And Jerome Powell is no longer, I believe, in charge of lowering or raising the federal funds rate. I believe that goes to the Germans over in Europe. And as that rate falls and goes lower, Powell's going to have no choice but to lower the federal funds rate. Hey guys, thank you so much for being in my world. This is just another step in helping you get the future that you want, right? Get control back over your future, right? Get that part off of autopilot, which didn't work. Take back control of your future, and that happens through training your brain and training your money in knowing which asset to be in, how long to be in it, and when to get out. Thanks, guys. This is just another step in getting that future you want, getting that great sleep you want, and really living that money badger life. Until next time, this is RC Peck.